The S&P 500 and Nasdaq closed with cuts for the second straight week on uncertainty over the Fed's rate trajectory. Stocks in the Asia Pacific open lower, while the GIFT Nifty implies a higher start for the Indian market. Oil prices hold at a 10-month high. Brent is firm above $94 a barrel due to extended supply cuts, along with optimism over Chinese demand. As prices rise, the government raises windfall gains tax on crude from 6,700 rupees to 10,000 rupees a ton. The duty on aviation turbine fuel is cut from 4 rupees a litre to 3.5 rupees a litre, while that on diesel is also cut from 6 rupees to 5.5 rupees. India's goods trade deficit more than doubles to a 10-month high of over $24 billion in August due to increased crude oil imports. Exports also rise marginally by 1.62% to $33.92 billion. And the UK government agrees to invest £500 million to decarbonise the steelmakers' Port Talbot plant, the nation's largest single carbon emitter. Tata Steel to invest £750 million. Employees' union warns of job losses, calls the agreement a disgrace. Up to 8 bills are listed for consideration and passage during a special 5-day session of the Parliament beginning today. The sitting will see a discussion on the Parliament's 75-year journey, House proceedings moving to the new building. There's also speculation of the government having a surprise item up its sleeve. Good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are the top headlines that we have for you as we get into this new trading week. There's a lot for us to track in terms of both the global as well as domestic cues. But first up, let's just take a look at what's happening across global markets. You have most of Asia, which is opening with cuts. All of Asia, actually, which is seeing some cuts at the open. So the Hong Kong and Taiwanese markets will come up for you. Like you can see, it's 170 points gone in the Hong Kong market. The Taiwanese index also 0.8% lower. So definitely looking quite weak there. The Kospi markets are also down around 0.8%. And whichever one I look at, so Straits Shanghai also seeing cuts of around 0.25%. And the Nikkei market is shut for a holiday. But barring that, you have all of the Asian markets which are opening with pretty significant cuts this morning. You'll also get the GIFT Nifty up for you. It is indicating that the start for our own markets could be a little bit lower now. So that is also pulled back. It is around 60 points in the red for the GIFT Nifty right now. That's what's happening across Asia. But let's also talk about the US market now. We had Wall Street, which ended Friday's trading session sharply lower. So the Dow was down almost 290 points when we ended the session. The S&P 500 and the Nasdaq also lost over 1%. This is just on Friday. Now, the broad-based selling comes as investors, of course, look ahead to the Fed policy meeting starting tomorrow. That is really the key cue to track this week. And all three major indices also ended the week quite mixed. So the Dow is in the green, but the S&P 500 saw some cuts. This is for the week, around 0.2% lower there. And the Nasdaq also was down around 0.4% for the week, which makes it its second straight week of losses. So that's how the U.S. markets really fared. And like I mentioned, it is going to be the Fed's policy decision that we're all tracking. It is the big cue that global markets will look at. But on that note, let's listen in to some opinion that comes in from Mark Hafel of UBS Global Wealth Management, Dan Swonk of KPMG, as well as Nathan Sheets of Citi on what they really expect from the Fed at this time around.
The key thing that we're focused on is the fact that the benign inflation data that we've been getting makes most market participants believe that the Fed has room to pause here. And that's one key. And then the second is that the U.S. consumer has remained really strong. And that's put out the fears of recession going forward.
This is one of the reasons why September was always such a tricky month anyways for the Fed. One, they're trying to calibrate, are we at our peak? I think they are at their peak in rates, and I think another rate hike is not likely. That said, they want to keep the option out there because they knew this could be potentially a lot of noise. And in fact, you can't ask for much more dissonance in the overall economy as they go into this meeting. And at the same time, amongst themselves, they're debating how do they calibrate getting to the exact right rate on rates. And that is a heated debate, even as the economy overall, inflation numbers are cooling, but energy prices are picking up. The Fed will sort of try to stay on the sidelines in September, but leave options out there to continue raising rates if necessary.
Our expectation is that one way or another, we're going to start seeing some cuts in the Fed funds rate, probably gentle starting in the middle of next year, and then coming down gradually through the second half. Now, how aggressive that is will depend a lot on where the economy is. If we're in the midst of a recession at that point, then I think that will open the door to more aggressive rate cuts during the second half of 2024. On the other hand, if some of these data that have been encouraging, suggesting soft landing, end up being a better predictor of where we'll be, I think those rate cuts are likely to be much more gentle.
All right, that is some important opinion that we're looking at from the global markets, but that's all of the cues that you should really watch in terms of the global setup. But let's now drill it down, talk about all of the domestic cues, as well as some of the stocks that you should have on your radar today. We have Rima and Surbi joining us now with the trade setup. Guys, a very good morning to both of you. Rima, let me come to you first. We were just going through the global setup and looks like the handover has been a bit weak. So we could start off in the red, but take us through everything we should watch today.
Indeed. So U.S. markets have, ended with cuts of anywhere between 1 to 1.5%, with the tech-heavy Nasdaq leading the declines, and this has pushed Asian markets largely lower. The GIFT Nifty is also suggesting a start with a cut of close to about 50 to 60 points. As you rightly pointed out, the big focus is going to be on the central bank meetings. U.S. Fed decision will be out on Wednesday. Indian markets react on Thursday, but it's likely to be a no rate hike, no rate cut kind of a policy, so low volatility. If you go by the base case. The one to track closely will be the Bank of Japan meeting, and this is on Wednesday. This is on Friday, because recently the Japanese yields have gone up and the governor has sounded a bit hawkish. So are we going to see the end of the ultra loose monetary policy in Japan is something the street will be watching. For the Indian markets, we've been doing pretty well, right? Last week, we almost went to the 20,200 mark by close. Week to date, the benchmark indices were up 2%, but this morning, the star is going to be negative. The two worrying macro, points, crude still above $94 per barrel, while dollar index had gone up to levels of 105.4. From that level, it's eased to below 105, but still at pretty elevated levels. In terms of flows, we had the DIIs buying 1,938 crore in the cash market, while the FIs net bought 165 crores. But remember, the flows numbers have been impacted because of the FTSE rebalancing which took place on Friday. Back to you.
All right, Rima, thanks a lot for taking us through all of those cues. Let's also talk about the stocks that we should watch in today's trading session. We have Surbi here with that list. Surbi, today, I guess the biggest one would perhaps be Tata Steel.
Yeah, you're right. The biggest one is going to be Tata Steel. UK government has agreed on an investment proposal in the UK steel plant. The company is going to get a grant from the UK government of up to £500 million. Next is Bharat Electronics. The company has received multiple orders worth 3,000 crores. Out of the 3,000 crores, 2,100 crores order is from Cochin Shipyard alone. Dhanlakshmi Bank, an independent director, has resigned from the board, citing various issues including capital enhancement issues, whistleblower issues by the directors, and unethical code of conduct from the bank's business. Strides, the company has got a second drug approval, HIV drug approval from the US FDA in the last 2 days, so that will be on our radar. KIMS will be on our radar. Company makes further investment in Kondapur Healthcare. Now the total stake in Kondapur Healthcare is close to 29%. And lastly, Texmaco Rail and Engineering, the board has approved a fundraising of 1,000 crores via a QIP.
All right, Surbi, thanks a lot for that entire list of stocks. We're going to watch for all of these in today's trading session. Finally, let me hand it over to Nigel, who's looking at all of the cues on the futures and options side of things. Nigel, looks like, we could start a little bit on the back foot because the global handover has been a bit weak, but take us through what we should watch.
Well, that's right. Morning, Pavitra. That buy on dips thesis is going to be tested today. And the last week, after a while, we did see that the Nifty bank was a relative outperformer in comparison to the Nifty. We haven't seen that in the last few weeks or so. So, the buy on dips thesis is going to be tested. And let's see how the Nifty bank moves, because now it's on the verge of hitting those fresh all-time highs yet again. What do the FIs do? Well, the FIs, they added long positions. Close to around 3,000 contracts is what they added. On the options side, well, they bought more calls than puts. Close to around 1.9 lakh contracts is what they bought. And on the writing side, both. They wrote calls as well as puts. How do things shape up then? On the put side, you had the 20,200 put and the 20,100 put. Both of them were fairly active. And given that the 20,100 put was active and the premium was roughly around 50 rupees odd, you're looking at the near-term support of close to 20,050 or thereabouts. On the call side, the highest open interest comes in at around the 20,200 call. The premium out there is close to around 99 rupees. So the 20,300 mark, well, that becomes a bit of a resistance zone. So we need to keep an eye out on that mark. The gift Nifty suggesting we pull back close to 50, 60 points. And I'll tell you what, the bulls will be hoping actually that in the first few minutes, we get an even sharper correction. Then it's a, risk reward could favor the bulls because the trend is up. So there are some risk factors if you look at Brent, the US yields, as well as the dollar index. But the trend is up. So I think stick to that till the lower levels are broken. Back to you.
All right, Nigel, thanks a lot for taking us through all of those cues. With that, it is time for our first short break on the show. But like we told you, Tata Steel has announced a joint agreement with the UK government for investment in Port Talbot. We're going to get you all of the details on the other side. Stay tuned for this important story. Hey guys, welcome back. You're still tuned into Power Breakfast here on CNBC TV18. Now, like we were mentioning, Tata Steel is expected to be the stock in focus today. This after the company and the UK government have agreed on a proposal to invest £1.25 billion in Tata Steel's Port Talbot plant. So Nigel is back with us to really explain the significance of this deal as well as what brokerages now have to say about it. Nigel.
Well, before we get to the deal, let's brief you on the significance of the Tata Steel UK unit. Well, they have the large share in the UK steel market. So in that sense, they had some kind of bargaining power. Tata Steel's UK unit accounts for approximately 14% of Tata Steel's global capacity. And keep in mind, this unit has been profitable just twice and has accumulated losses of more than 2 billion over the past few years. Now, Tata Steel and the UK government, well, they've jointly agreed on an investment proposal and so have announced a plan to invest in a 3 million ton EAF steel capacity. The restructuring plan will entail a total cost of around £1.25 billion, of which Tata's will bear close to 60%, while the UK government will bear close to around 40%. The key reason for this revamp, first of all, is that the existing asset was reaching end of its life and had turned operationally uncompetitive. It is also a step towards the decarbonization drive, given the low carbon footprint of EAF-based plants in comparison to the existing blast furnace-based facility. The key benefits of this capex will be it transforms the UK unit into a sustainable, capital-efficient and profitable business. It will also help to reduce the direct carbon emissions by close to around 50 million tons over the next decade or so. Well, the Tata Steel management, they expect the new facility to see around 150 to 170 pounds per ton of steel savings owing to the reduction in employee and carbon cost. Well, the deal is expected to get finalized and the approvals are expected to come through in the next 3 months. The project is expected to be commissioned in the next 36 months once all the approvals come through. Moving to brokerage reactions, ICICI Securities, well, they believe that this deal is very significant as support from the parent for the UK operations will reduce in future. They also peg an incremental value of close to 10 to 16 rupees per share, assuming different scenarios of cost savings potential. So they have gone ahead, they've raised their valuation multiple and also their target price. Jefferies, well, they believe this investment is a missed opportunity to reduce exposure to the historically high-cost, low-margin geography. They also say that Tata's share of investment implies outflow of around $230 million per year for the next 4 years. They continue with their buy rating with a target price of around 145 rupees per share. Finally, Axis Cap says that several loose ends which remain unresolved, and particularly they're stressing on the employee restructuring cost, which according to them can work out to roughly around 300 million pounds. So they maintain a reduced rating with a target price of around 112 rupees per share. So it's a positive move. The brokerage reaction is a little bit mixed, but I think this is out of the way. So expect the stock to open up in the green. Back to you.
All right, Nigel, thanks a lot for bringing us all of the details on this very important piece. But with that, we are going to get into a break. There's lots more news and updates that we're tracking on the other side. So stay tuned to catch all of that. Welcome back. You're still tuned into Power Breakfast. Let's now bring you some important national updates. A 5-day-long special session of the Parliament is all set to begin today. So House proceedings will move to the new Parliament building. This is on Tuesday and ahead of the session. An all-party meeting was also held on Sunday to brief leaders on the tentative agenda, where several parties made a strong pitch to pass the long-pending Women's Reservation Bill. Now, the contentious CEC bill will also be up for discussion. So this is tomorrow that we move to the new Parliament building, and of course we're going to keep bringing you any updates that we can on this special session. But as we wind down on the show, here is some good news for cricket fans and, well, India fans, because Team India delivered a statement win in the Asia Cup final against Sri Lanka. Sri Lanka opted to bat after winning the toss, but an unplayable 6-wicket spell by Indian pacer Mohammad Siraj saw the Lankans losing all their wickets for only 50 runs. The Indians then chased down the target in just over 6 overs, finishing the last tournament ahead of the upcoming World Cup on a big high. So those are all of the visuals coming through of the celebration, India winning the Asia Cup, and of course great news for all of us here that are big fans of the sport and big fans of Team India. But with that, we're going to wind down on this edition of Power Breakfast with the news that the Asian markets are not looking so good. The implied open for our own markets is also around 60 points in the red. But let's see how we take it from there. Thanks for tuning in. We have Bazaar Morning Call up into.